shocked a little bit that the market as well.
I'm also shocked.
The index managed to make it to 18K yesterday, and guess what? We're only 5% actually high away from the 52-week highs. So at an index level, we're doing quite okay. Of course, yesterday it was Reliance all the way, all guns blazing, or for that matter, the month-to-date performance that one has seen from HDFC Bank. We closed above the 18K mark, and FIIs have been buyers for a fourth consecutive sessions. And exactly what we were talking about yesterday. A couple of these large caps do the trick, and we could get back to the all-time peak.
Yeah, I mean, are we at the turn now? Are we really at the turn in terms of the index wanting to break out? And is the stage set now for markets to take that leap forward? Let's put things in context here. We are 5% away from an 52-week high. We are above 18,000 on the index, and foreign institutional investors have turned net sellers. Incrementally, there is no calendar event. Budget is behind us. Earnings season is over. Globally also, things are under check, whether it is the US 10-year paper or the bond yield. So if genuinely foreign institutional investors, after a genuinely long winter, if they are back, will that do the trick for the markets? I would say that there is merit in assuming that Nifty this time wants to make a serious attempt towards breaking out of the range, because it is getting support from some of the heavyweights, which in a sense has been the lacking factor. And if you get a combination of banks and a stock like Reliance, if they're on the same side of the trade and the positioning of the market is so light that this time little bit of lows can take the market higher much more. Last time when the markets were at same level, the market positioning was drastically different and everybody was anticipating a breakout trade. This time around, the positioning of the market is very light, so a little bit of lows, a bout of short covering, and a push from major indices could really take the markets to an all-time high. So the strategy should be very simple. Don't be short in this market. It makes sense to stay with heavyweights, especially FI dominated stocks. And while it's too early to say that whether the attempt towards 18,000 this time will fructify or not, but there is merit in assuming that this time around the positioning of the market is so light that you may just see the market breaking that glass ceiling.
Yeah, and we've got all the ingredients, as you said, put in place in terms of what could really lead us to that point. A quick roundup of the global markets. It's been a fairly decent close on Wall Street, nothing to really shout home about. But of course, you do have the stocks closing slightly higher in the regular trading session. Then you also had stronger than expected January retail sales report coming in. The Asian markets pretty much across the board off to a good start. You had Japan's record trade deficit of 3.5 trillion yen, and that is being digested by investors. Pretty quiet start to the SGX Nifty. So Nikunj, given that you're talking about that serious attempt to break out, that's all when it comes to the frontliners, with a lot of the heavyweights doing the heavy lifting. Yeah. But what about the broader markets? Is that going to stay behind in this pullback rally?
No, I think today and tomorrow attention would be around Bank Nifty, and whether the heavyweights do the trick for the market. So frankly, that really becomes the point at which the market attention would be centered. And if you break out of the range, which in a sense has really dodged us for a long period of time, let's look at the 6-month chart of the Nifty, and you will actually see that how the market has just been crawling its way up and down, gradually crawling its way up and down. And once that breakout is established, I guess energy levels and interest in mid and small cap stocks will come back, because what traders are aware of the fact that if you don't see more technical strength in the market, then all attempts of revisiting mid and small cap stocks also will get challenged. I go back to that same point which I've been making, that whatever could go wrong has gone wrong in the month of Jan and early Feb. But yet the market held on. The markets are light, the positioning is light. So little bit of good news, some flows, a technical push, I guess can really do the trick. You don't need too much of gusto. You don't need too much of, you don't need too many triggers, and you don't need too much of liquidity to make the market break out, because the positioning of the market is so light. If there is a turn in just 2 or 3 factors, I think we could really, break out of the range.
And the index heavyweights, like you were talking, I mean, ITC with its 4% weightage, the year to date move is already 15% for both HDFC Bank, which have amongst the highest weightage on the index. It's a 3% apiece move, and similar is the case with the TCS and Infy too, surprisingly.
Yeah, so for markets to go higher, I think you will have to look at the FI dominated stocks. The number one FI dominated stock is HDFC and HDFC Bank, which is doing okay. Second is Bajaj Finance. Look at Bajaj Finance. I mean, we've not realized that Bajaj Finance has just added a good 4-5% in quick time. HDFC Bank has added a quick 4-5%. Reliance has added a quick 4-5%. So these are the heavyweights which really, frankly, hold the key. And if you see flows coming back into heavyweights, and if we see this kind of a pattern emerging for next couple of days, I would say that the activity in the mid and small cap space will also pick up.
Yep, and that remains to be seen. But clearly, the big talking point is the fact that now, where do we go from the current levels, given that we're now just about 5% away from those 52-week high levels? Let's hear out what market experts are alluding to. Aman Chauhan, who we spoke with yesterday of Abacus Asset Manager, believes that it's the financials that will lead the way. And in the space, he likes the microfinance stocks among the lot. Listen in.
Within financials, microfinance is something that we like. This sector is coming out of the COVID worries, and this very strong growth numbers that we have seen from all the players in this macro segment. That is something that we like. We are incrementally getting positive on auto ancillaries also. So while we don't own a direct auto stock, but we are getting into new names into auto ancillary. Railways, manufacturing, clearly there is a good headway for the next 2 to 3 years. The only issue is to get liquidity and to get stock at reasonable prices. So pharma on the fringe is looking good. The kind of companies which got impacted due to higher API prices will now, I think, start to regain the kind of API company numbers which you are seeing where profits have declined by 30-40%. Clearly is going to benefit the pharma companies which use this API. So the next maybe 3-6 months, pharma can also be an interesting sector to look at. One has to be very selective. So out of the 10, say top 10 pharma companies exporting to US or the European markets, maybe only 2 or 3 who have a strong portfolio and maybe a strong brand positioning